Hey, everybody, welcome to our April 3rd, 2023 edition of Wall Street Winners. Let's dive right in. Bank crisis? What bank crisis? Oh, the bank crisis that caused the rally that I told you about. Got it now. So, as you can see, as I told you, we are back in bull mode, and we took a week, 1 week off before buying, but we started to buy last week, and those trades have done very, very well. Hopefully, you're a fully paid up member because those trades alone could pay for your subscription to Wall Street Winners. But as you can see here, the S&P, the best index for the market, has broken above a little micro high and a mini high, and it's going to go back and break a major high here very, very soon. Now, the purple predictor had been quite bearish, but notice that the slope of the ascent is perhaps even sharper than the ascent on the price action itself, but it's at least equal to, which means that the smart money is back on the buy side in the S&P. Another good sign for the market, which was not there last week, is in the upper box here. You can see that the buying pressure, which is the little green line, is higher than the selling pressure. Buying pressure came back in a lot in the last week. The big thing before that was the reason why the market was rallying is because the selling pressure was declining. But as you can see, the buying pressure wasn't really doing a whole lot. But now the buying pressure has taken off. I think it's the smart money that's come back into the market on the long side. The NASDAQ is the leader here. You can see that, yes, we broke above that mini high and the micro high, the mini high, and guess what? We're at the major high here, and you can see price action was stellar last week. Look for the NASDAQ to make a new high for the year this coming week. Now, let's stop here for a second. Let's go up here at the top here first. So there's still another, month for bullish seasonality. I put in a buy spot up here, up at the top of the chart. I don't think we're going to fulfill it. So we're just going to have normal size positions, I think, until the fall. No real, the seasonality didn't really help us this year. Nearly every year it helps us. 2008 was the last year it didn't really help us. It didn't really help us this year either because we had a major bear market last year, which we guided you through. But here's the interesting thing. Starting May 1, the utilities turn to bullish. But what I do is I always start a month early and carry on a month late. So starting April 1st, I look for these breakouts to occur because seasonality can occur a little early. So I've already drawn in there. You can see there's major resistance here. We're at it. I'm going to give it one more week, but it looks to me like we're going to break through here and we're going to start to put on 50 to 100% higher trades in utility stocks. We'll start out with the ETFs that mimic utility stocks, but pretty soon we'll have some utility stocks in our portfolio, individuals, plus we'll keep the ETF, but we'll buy the leaders in the utility sector and the utility index. So this is an interesting development here. Seasonality, you can see it's all clear until the beginning of May. Then we might have another dip down. Probably we'll have another dip down. You can see that where's the money coming from? Well, the smart money sold their bonds and they bought stocks. That's what this is telling us. So that's where the cash is coming from. And you saw that the NASDAQ was about to break a major high. So that means that there's more risk coming into the market. And that's, once again, bullish for the market. When people are risky, they get rid of cash, they get rid of bonds, and they buy stocks. That's why our riskicator is such an important and unique indicator for determining how risky, how frisky do investors want to be. Europe, stronger than the Dow, stronger than the S&P, a little bit weaker than the NASDAQ, but also very good. So we're going to be looking to get long there as well. The only bad news here, well, there's a couple pieces of bad news for coming up, but here's one bad news. The yield curve keeps getting more inverted. This is not good. We're not going to see a rebound in the economy. We're not going to see a monster bull market until this starts to hook back up again. We had started to hook up here, then we fell off and the market sold off. So I think we're going to probably see it move up a little bit. And we'll get into that here in just a second. So bonds have rallied. Now, what does that mean? That means lower long-term interest rates. Well, lower long-term interest rates means, since the Fed is not lowering short-term interest rates, that means the yield curve is actually getting flatter. So this is a little bit behind the times. I think we're going to see this start to move back up towards the zero line. And it's going to be because bonds are going to rally. Now look at all this resistance. You've got 3 major highs up here. It's going to be very difficult to break through that. But I think we will, because look at the purple predictor. Now, what does all this mean? It means buy bonds. That means that long-term interest rates are coming down. That's bullish for the stock market. But we really need to see the yield curve, let me go back, start to move up again, because that's even more important than where bond yields are, is the shape of the yield curve. But that's not really going to happen until the Fed starts to ease as well. And our bond indicators are also telling us we should see the same thing. Now, if that's the case, that probably keeps the dollar under pressure, because lower interest rates in the US, it's the leading major central bank right now. So it led on the upside, which gave us the big bull market in the dollar. Now it's leading on the downside, giving us back the bear market. Now, if the dollar's under pressure, you know what that means. That means gold's going to go up. And here we can see it right here starting to rally. We've got a little ascending triangle formation, flat top, higher bottoms, declining volume. This is a classic indication of an ascending triangle, which should be broken to the upside. So I'm getting more and more bullish on gold. Gold key indicators, 2 bullish, 1 neutral. That's good. That's good. And even the yen, even the yen here is not that bad. Crude oil has done very, very well. I have to say, I'm not in sync with this market. You know, if you've been following me for any time, you know I'm one of the best predictors of the crude oil market in the world. Really, I am. Pat myself on the back. But right now, I don't feel like I'm in sync with this market. So when I'm not in sync with the market, the best thing I can do is stand aside, and that's what I'm doing. Purple predictor is bullish, but the trend is still technically bearish. We're making lower lows and lower highs, so I cannot get excited about this market. Bitcoin also, we had a nice rally in Bitcoin, but we didn't see much of a rally in the purple predictor. So the smart money's not buying Bitcoin. They're not really buying this rally at all. So I can't get long Bitcoin. Is it a bull market? I'd have to say it's probably a bull market, although technically we're making higher highs and lower lows. That's technically a neutral market. But since the most recent high was explosive, I have to give the nod to the bulls, but I just don't want to buy. All right, everybody. Thanks very much. Fully paid up members, hang on just 1 second.
Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com, stockbutler.com. And the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant. You know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best. That's the name of the technique. And bingo, there's the list. And then since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.